Bluetooth mode.
I'm going to show you exactly how my thought process is once I go into the charts and overall how you can implement the same way that I mark up my charts. So with that being said, we're going to first, because I've recorded this video once and I'm not letting it screw me over this time. So with this being said, normally I look at the 1 hour time frame. So whenever I'm looking at the 1 hour time frame, the first thing I try to notice is where is current price. And then from current price, where are my highs, where are my closest highs and lows from current price? So first we're going to point out this one. So this is our current high. So right now we know this is a high. And I can already see it's a higher high. So I'm just going ahead and mark higher high. And from this higher high, normally I would either go back down from where it started because this is that level of support that we need. That level of support is where all this bullish momentum came in from. So I definitely want to know where that bullish momentum is going to come from. Because let's say if we look for sales later on, this will be that first thing that we'll look for, especially for a target, because this is where that bullish momentum came from in the first place. And you can see how I have my sessions on, and you can see how London session plays a big role in trading GU, especially when you trade it in session. You can see that there's a lot of momentum and a lot of movement. So keep that noted for later on. So with this being said, from this low, so now we have this low, this higher low actually. We have this higher low, and the reason why I say that is because you can see here was a high, and then from that high, this is our previous low, so our previous level of support. But what is very important now is that we have our higher high and our higher low, so we can confirm that this is an uptrend. And from here, we need to focus on what happens next. So after the higher high is created, we can see that price ends up selling down and creating this level of support. This level of support is still a higher low. So this higher low is higher than the previous one. And this would tell us that price is still in this downtrend. And from this level, since we have current price, it hasn't broken anything in between here. So what I would normally do is mark these up, normally with my yellow boxes. Boom. And now I would wait for price to break out either my higher low level or my higher high level. Because remember, there are sellers sitting here and then there's buyers sitting here. And with that being said, we would look for which one is going to take most control of the markets. We know that if price breaks under here, then that means there are no buyers here. And if price breaks above here, then there is no sellers here, right? So as we continue, we see that volume kicks in for London session. So now we have a low. So this London session is the indication. Normally when the indication happens during session, that session is going to push down for that day, and then the correction is going to come later on in the day. Sometimes you can catch an indication and correction on the same day. But if it doesn't happen, don't be stressed out the next day or even out of session. It'll start to make that push back up, which is super cool. Especially on days like Mondays and Tuesdays and even Fridays, price makes that indication, and then coming into the following day, it'll make the whole move that it wants to make, or probably 2 days in advance, it'll make that final move. But with this being said, price ends up looking for a new level of support. And this level of support, bruh, the cops couldn't be any louder. But this level of support is created. And since this level of support created, we can see that buyers are sitting at this level. And since buyers are sitting at this level, this lets us know that if price falls under this level, this lets us know that there are no buyers sitting at this level anymore, holding price up. But for the time being, since price is still above it, price still has the potential to buy up. And then we have this lower high as well. So I forgot to mention this. This is now our lower high because it is lower than the previous one. So as we see here, lower than the previous high. And then we have that fall. So this will make this a lower low. So here, lower low. So lower high, lower low. So this determines now that price has switched from an uptrend to a downtrend. And this is what we overall want to look for. We want to look for these swing highs because they're overall going to tell us what trend we're on. And since they're following off the higher time frame, so since we're trading 1 hour, 4 hour, sometimes daily, these are normally going to hold way stronger than trading off the 5-minute, 15-minute for your structure. For your entry, 5-minute and 15 minutes is good, but for the overall structure, you want to use like 1 hour, 4 hour, or daily time frame. So here, price is still above this level. We look for a correction back up to here, right? But since price has fell short, that means that this is a good thing. So most people say, hey, price doesn't push all the way back to the previous level in some cases, and that is okay. That is honestly 100% okay because price is not always going to do that. But this is okay because this lets you know that the sellers are getting stronger. They're not letting price have the chance to even push any higher than the previous level that it broke before. So in this case, price ends up making a level of resistance. Now, coming into this London session, this is tradable by even scaling down to that 5-minute time frame and then breaking it down from there like how we normally do. So looking at price with this resistance level, we can see that price has this resistance. Boom. A small high is broken, which is okay. It's cool. We don't really care too much about it. We can see that price ends up making a level of support. Once it makes this level of support, we can see that makes a new low, corrects, and then coming into London session, back under that yellow level that I have here, we see that once we made this indication, correction, and then coming into London session, we can see that that continuation happened under this level. So this is a possible trade. This is definitely a possible trade for the scalpers. You'll put stop loss here, and then you will be targeting the levels down here. And the reason why we're targeting the levels down here, because that is overall where that low was made, and then price ended up correcting. So you can see the uptrend started. We have that. Just go ahead and mark them all, right? So we have that support. Once we have that support, we have a higher support. So that lets you know you have a higher low. And then we have another higher low. And then price is still pushing up, corrects, and then starts to break, higher high, support level, new resistance, comes back down, or these resistance make this level of support. So even here, makes this level of support in here, and you can see it break down under this level. So these are also confirmations to let you know that price is breaking under this level, trying to sell. Here is where we see buyers kick into the market for price. Buyers kick into the market, push price up, which caused this high. But then that high fell short, and we can see the lower highs kicking in. So overall, all I'm doing is just reading the buyers and sellers, reading the levels. So overall, I'm just looking at the level, determining if buyers are sitting here or sellers are sitting here. Obviously, buyers are sitting here and sellers are sitting here to push price down. So I'm overall looking at the reaction and then playing based off that. But that's just a simple trade that you could have took throughout the whole London session. Whenever we trade this way, whenever we trade based off the higher time frame, scale down to the 5 or 15, when we do this, we are normally going to trade trends. So you can always catch yourself ending up in a trend that you can hold long term, which is what I want you guys to learn overall. Let me make sure.
This is your brain when you're struggling to focus. And this is your brain when you're in the zone. But get...
Okay, am I good? Let me, because bro, last time you guys won't even understand Okay, yeah, I'm good. Perfect. So, all I'm doing is scaling down to that 5 minute time frame. If the 1 hour is bearish, then I would go and find a bearish momentum or a bearish movement and bearish structure on that 5 minute and 15 minute time frame. So that's all we did for this London session. And then with that new low throughout the session, you can see price is going down still. So how you can do the scaling out or how to exit is normally your target will be here. So this will be your first target, and that's already a 1 to 3. And since you're aiming for that 1 to 4, 1 to 3 area, I normally go for 1 to 4s. You can, trail your stop loss after this. Me personally, I don't like trailing the stop loss, but for some of the beginners, it is good to, trail your stop loss and, learn how to take profits. But throughout that whole day, I would have probably been holding throughout the London session. So once the London session ended, which is roughly, let's see, we're still going through session. We have that big push. London session ending. Still looking for that London session to end. And London session ending would have came right around here. So right around here, if I'm even still holding this trade, there's a lot of momentum that came from price coming back under this level. And we can obviously tell from the 5 minute time frame. So if we go to the 5 minute time frame, remove this, you can follow price just like this. So follow it with the lower highs of the 5 minute, boom. And then once you see this, price makes a lower high and breaks above this, and you can exit based off that. So price is making lower highs on that 5 minute, and once it breaks, you can go based off that if you already hit your target. If you haven't hit your target yet, in this case, we already have, everything after this, you just need to follow with a 5 minute or 15 minute. So I'm pretty sure this was a 15 minute pullback. So if we scale, yeah. So the 15 minute made a low, scaled back up, retested this level, and then dropped again. So this would have just overall been a good trade. No matter where you closed at, if you would have closed at the lows, or if you would have closed here, or if you would have held for the whole day and closed here, either way, it would have been a good session for you. But what that overall showed us was that on that 15-minute time frame, 5-minute time frame, we can make that entry. So overall, that caused price to make a new low in the market on the 1 hour time frame. So now we have a new low on the market. And the reason why this is our low now is because we can see buyers kicked into the market and push price up in one direction. So overall, we will wait for price to continue to build that bearish level of support or that bearish level, and then start to build up and start to give us that push to this level of support or level of resistance now, and hold above these levels. The only thing with this is what people have been saying in the videos and comments is sometimes price makes a low and then it makes an indication to the upside, or it spikes out somewhere or grabs liquidity, and how do they avoid that? So overall, as long as you're trading with the volume, you kind of avoid all the liquidity problems. There will be sometimes, like let's say on news days, where liquidity in the markets during session is still very volatile, and those are just things that you have to take with trading. Trading inside the volume times are going to be very risky because price is moving super heavy. But as long as we're sticking to the higher time frame, we overall can avoid some of the noise that is presented in the markets throughout the session opens or throughout the sessions with volume. So as we continue, price is holding this level. This London session comes in, kicks down just a tad bit, and then pushes up overall. So it ends up pushing up above this level. And remember that level we was talking about earlier with the higher low? Notice how that level ended up becoming, you see how buyers were in control and pushed price all the way back up to this level? Look how that level plays now. Look how that level plays now. So overall, we end up having price push down. This London session probably would have been a loss because I'm pretty sure it consolidated the whole session. And that's okay. Trading is not going to be 100% trading this way. But overall, we know that under this level, price has the potential to sell, right? So since price has the potential to sell, we'll come back the next day. We'll count this London session as a win, and then we'll count this London session as a loss, right? And then coming into the following day, so the following London session, we see that price is coming under this level, and we'll scale down to our 5-minute, 15-minute time frame. Go to London session. We see that London session kicks off being bullish. Even though it's under this level, we can see that London session kicks off being bullish. So now we're not in this trade. The only thing that's going to get us in this trade is price to turn bearish. So what we're going to do is continue to mark our highs as price is making them and wait for price to turn back bearish. So we're going to continue. Price is still making highs. Boom, price is still breaking those highs. And boom, notice how price makes a high, but that level of support that was made based off that high being made. So let's go here. Notice how price, we scale in, price made a high, made a support. Failed to make a high, failed to make a lower support. So in this case, we can't say that this is bearish because it hasn't made anything. So now we're not trading because it's in between a high and a low, right? But then price makes a new high. So now we're trading in between this, and then price makes a level of support. So now we have this level of support and this high. Now we're going based off this. So overall, as long as you have a high and a low, that's what you're going to go based off of. So since we have this level of support, now this new high is made, and we're going to go based off this high and this support, because that's what we have in front of us to show us buyers are here and sellers are here. So since that happened, what I wanted to show you is look how price is starting to break under this level. This is very important because now we know London session, price is breaking above this level. I am getting ready to sell. And the reason why we're getting ready to sell is because now we have a lower high, price is starting to sell, and we overall can see that the trend is changing because price is breaking support. Remember, price is not going to break support just to be bullish long term, right? If we're seeing the 1 hour is bearish and we're trading in session and the 5-minute and 15-minute are becoming bearish, then this is letting us know that, hey, we're able to place a trade based off that break, put our stop losses above here, scale back out to that 1 hour time frame to get our target, which is that new low. And once we target that new low, that will be overall where we are swinging our trade to. Now, the safest way, because this is how I do it, this is normally how I do it, and I've been trading for 4 years, and I've seen the market during session, change trends and then overall go to those swing levels. So I like to, try to, take my chances, take the risk to get into that trade early. But the more easier and more safer way to do it is waiting for price to come down to that level. So coming down to this level of support, once it comes down to this level of support, you're able to enter off price breaking that level. And you can see that there's a lot of volume because there's buyers sitting here. So you see that reaction towards the buyers. Once price gets to this level, the reaction from the buyers is pretty strong, but the sellers are way stronger under these levels. So since that happened, we can see that price ended up continuing under this level, and you're able to take that trade successfully under this level or even from the change of structure on that 5-minute time frame. So remember, the whole strategy, the whole point is to use the 1 hour time frame, get on the 1 hour or 4 hour time frame, determine what the trend is. Under these levels. So since that happened, we can see that price ended up continuing under this level, and you're able to take that trade successfully under this level or even from the change of structure on that 5-minute time frame. So remember, the whole strategy, the whole point is to use the 1 hour time frame, get on a 1 hour or 4 hour time frame, determine what the trend is. Have that trend make an indication. Showing which direction it wants to go. Once it shows which direction it wants to go, you overall want to say, okay, prices indicating that it's becoming bearish. So I will look for signs that price is becoming bearish. But price is also going to correct once you have those indications. So as soon as you get the indications, price is going to correct. Once it corrects, you'll scale down to a 5-minute to 15-minute time frame, and then you'll look for price to go from that bullish to bearish. In this case, all we did was we seen that the 1 hour was bearish. We scaled down to that 5-minute, 15-minute time frame as it was correcting. As it corrected, we started to see the signs of the 5-minute and 15-minute time frame becoming bearish, and we traded it in volume. So if we go back, we can see that the time that we was trading was London session, and look how London session turned out for us. And then overall, since we're trading on that higher time frame, so since the 1 hour is overall making its move, we can say that, hey, this is something that we can hold long term. Obviously, take your targets right here. So this will be your first target, and you don't have to set a hard TP. So that means you don't have to set it on your trading platform, but you can kind of set an alert here and see how it goes. And then overall continue to monitor it as it continues to go down. So TP here, hold a couple partials and see what price is going to do furthermore. So we have a swing low here, and we can say that, hey, we don't want price to come back above this level, right? And as we see price during another London session, it's holding as much as possible below this level. So we can feel comfortable with holding this trade a little bit longer, and just overall, monitoring the trade. We can see that price is making new lows, and we can see that price is willing to go down with those new lows. We just don't want price to make any kind of bullish structure, and we're still following price. It's still making those lower highs, and we're still feeling good about this trade because we have those swing highs. And I'm really good at doing it on the 15-minute and 5-minute time frame, marking up, because if we scale out to the 1 hour, I'm pretty sure it's going to be the same highs and lows. But yeah, as you can see, overall, we continue to hold this trade throughout.
For just $67, you can generate as many videos as you want and never have to worry about showing your face on camera or using complex editing tools. With only a few clicks with Toonbeat,
Hi, my boys. Today is day 8. And yeah, we are here almost 10 days in. I hope you guys have learned a lot. I appreciate the support. I love the support when it comes to the videos. So I keep dropping them every single day. I wake up and I'm like, dang, we got more and more comments. We got more and more likes. People need help with this. People need help with that. So I just keep doing it. And with that being said, we are on day 8. Today we are going to talk about where's my chain. But today we are going to talk about the trade setup that I took today. So I took a trade on gold today, and it was pretty successful. It was a really, really good trade. So I'm going to break it down to you. Everything that I've taught so far is good enough for you to be able to catch trades like this. So after day 10, we're barely going to be on the charts. We're going to be on the charts, and there's going to be breakdowns later on, trust me. But after day 10, I have to truly shift your mind from thinking that you need more, because what I've shown you already is good enough. It's what I do. So everything that I've said so far is exactly what I've applied to all of my trades. And I'm going to show you, right? And now you just have to get into the mindset of stop thinking like, oh, this is too simple, or it can't be that easy, or not trusting your analysis, or trading on the lower time frames overall when I'm telling you to stay on the higher time frames because those levels are way stronger. But you're not listening to me. So if you don't listen to me, you're not going to see any progress. And if you are listening to me, but you're not, critiquing and making sure you're doing the right thing. So you're listening to me, but you're still not doing what I'm implying. You get what I'm saying? So with that being said, I want you to take this video. I want you to have an open mind, and I want you to truly understand what I'm saying. So literally, before I start, I want you to clear everything in your brain right now. Clear everything out of your brain. Like literally everything. And just listen to what the words that I'm saying. Go onto your chart and do the same thing that I'm doing. And we will start. So, with that being said, let's get into the video, right? So, today I was able to take a trade on gold for some sells. The reason why I took sells, so first I was looking for buys above this level, so above this level right here. And the reason why I was looking for buys is because the first time price ever broke above this this yellow box. So if we go to the 4-hour time frame, we can see that price has a swing high, 2 swing highs here, meaning sellers are sitting at this level and they're pushing price down. So sellers down, right? So sellers are at this yellow box pushing price down. If that doesn't make sense to you, I don't know what will, right? Sellers are sitting at this level pushing price down. They don't want price to come any higher than this. So if price is to come above this level, this lets me know that there are no sellers at this level anymore, right? And there's an indication. So this is our next level of sellers. This is the next level where sellers are at, right? So when price corrects, we are going to look for price to come above this level to do the same exact thing that happened right here. That's all we're doing. So when it comes to trades, all you're doing is looking for where the sellers and buyers are at, which normally comes from the swing highs and swing lows. You look down, right? So sellers are at this yellow box pushing price down. If that doesn't make sense to you, I don't know what will, right? Sellers are sitting at this level pushing price down. They don't want price to come any higher than this. So if price is to come above this level, this lets me know that there are no sellers at this level anymore, right? And there's an indication. So this is our next level of sellers. This is the next level where sellers are at, right? So when price corrects, we are going to look for price to come above this level to do the same exact thing that happened right here. That's all we're doing. So when it comes to trades, all you're doing is looking for where the sellers and buyers are at, which normally comes from the swing highs and swing lows. You look for either a swing high or a swing low to get broken. Once it gets broken, whichever way it chooses will let you know if there are buyers and sellers in control of that level. So with this being said, price under this level sold. Why? Because there are sellers at this area of price. This area of price, under it, price has more potential to sell than it does to buy. So it doesn't make sense to buy under this level unless you're being risky, like I'm finna explain, right? Unless you want to be super risky and try to catch the bottom, there's no reason why you should buy under this level until price shows you otherwise that it's coming above this level. So once it comes above this level, you have any rights to place a buy. It makes sense, right? No matter where you place that buy at, you really want to place it where the initial break is. But no matter where at you place that buy, you could place it here, 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 here. Well, I wouldn't buy at the top, but get what I'm saying. Anything above these swing highs has the potential, I'm dead, potential to push above and come to these levels.
Every year, Nigeria spends hundreds of millions of dollars importing palm oil. Yet, the land.
So, with that being said, this level of support, we can see that buyers are pushing price above this level. So since buyers are pushing price above this level, we started to see, this is actually what I did last night. Last night, I took a little risk on the 15 5-minute time frame. I seen price make this level of support here, so I kind of bought off of this, knowing I wasn't supposed to. I just wanted to, risk some money, put some money into the market because I was bored last night. I needed something to do. But the right place to do it is above this level. So my loss doesn't even count. My loss doesn't even count because I was being dumb. I knew I was doing the wrong thing, but I just wanted to make some money. If, maybe price would have came up during out of session. But besides the point. So this level right here, remember, it came from the 4-hour time frame. So that level came from the 4-hour time frame. With that being said, let me make sure we still rolling here. We still rolling. This level here, we can see that buyers are sitting at this level, pushing price in the different direction, pushing price up. So the moment, and today we might just call this reaction, right? Right? The moment that price breaks under this level, there's two ways that you can trade ICC, right? That you can use the indication, or you can purely just go off the fact that price has built structure that you can go off of, right? And what I mean by that is, for one, price sold off from where the level of sellers were at. So the level of sellers kicked in from down here. We're already under a level where price originally sold from way back in the past. So if we look over here, we can see that price has originally sold from these levels down to these levels. We just need some more confluence. So what we're going to do is, once again, scale to that 5-minute 15 to critique. Your 4-hour, your 1 hour is to overall guide you into what levels you need to be using. You need to be using the higher time frame levels because these levels, they break, and then that means price is looking to go in that direction with a strong push. The 5-minute time frame is just the how do I explain it? It's the preciseness. You need it brings preciseness to your trade. It brings that's not even the word that I'm trying to look for, but it just overall is the finishing cut to your trade that you need to have or that you need to take. So scaling down to this 15-minute time frame, all I did was I seen price was breaking below this level. It made a lower high. So these highs are lower than the previous ones. Even these are equal high. And it's breaking its own 15-minute level of support. So there's a support being broken. That's a bearish sign. There's a lower high in the markets on the 15-minute time frame. That is a sign. The 4-hour level that was holding price up. So once we go back, that 4-hour level that was holding price up, that is a sign. Price building that lower high from earlier and then selling off, that is a sign. These are signs that you are missing, that you're not, taking account of. You're like, oh, but there's a new high. I'm only going to focus on that. Don't focus on one thing. Follow price and everything it does. Every single thing it does, it is for a reason. So you need to follow along with what price is doing because it's showing you, hey, I'm going to do this. And if it wants to do that, you follow it, right? Maybe I did want buys on gold. Maybe I did want sells on gold. Who knows? I was just following price. Price broke a level of support. Price made the lower high, broke a 5-minute, 15-minute level of support. So I was comfortable with taking this trade. So if you guys follow me on Instagram and any other of my socials, you definitely see me post this today. But the reason why I took this trade, and we can go back to that 15-minute time frame. We can go back to that 15-minute time frame. And the reason why I took this trade was because of those reasons that I explained. 15-minute, 5-minute break of structures, the 4-hour level of support being broken, 1 hour aligning with everything. The 4 hour is bearish, the 1 hour is bearish, the 15-minute is bearish, the 5-minute is bearish. There is no other reason why I shouldn't get into that trade. So what I did was, once again, took that time frame, 5-minute time frame, or 15-minute time frame, 5-minute, either one. If you feel like the 5-minute looks better to you, you can use the 5-minute. If the 15 looks better to you, use the 15. There's no right or wrong. Just do not use the 15 and 5-minute to build the structure. Do not wake up in the morning and mark your charts up on the 15-minute time frame and the 5-minute time frame. No, your swing levels need to come from the 1 hour or the 4 hour time frame. The higher the levels you go, the higher the stronger the level is going to be. So if you're marking your charts up on the 4 hour time frame, it is going to be a strong push. It is going to be some strong momentum if price breaks your highs or lows on the 4 hour time frame. So with that being said, there is no reason why you should not be able to take trades like this. There's no reason. You're failing yourself and you're overthinking it. Go back and watch the videos. If I don't say it, then I don't use it. So stop questioning me on things that don't even make any sense. You're just making up things in your head to, correspond. And 2, stop trading things that don't have any volume. You guys trade something like AUD, NZD or something, and then it's not moving. And then you're like, bro, ICC don't work. Of course it doesn't. It's not moving. Trade something with some volatility. Suck it up. Build some capital to the side. Learn, study ICC. As you do that, as you learn, once you feel comfortable enough to actually come into the markets, trade on demo if you have to. But onto the side, stack some money to the side. Once you feel comfortable, come into the markets. So that way you can probably have, I don't know, $500, $1,000, $3,000 before you start trading, because you're trying to trade NASDAQ and gold and you only have $50. Stop trying to get into the market with a little bit of money and trying to come out with like thousands of dollars. Like, you have to have a skill. And I tell people all the time, people that do all these small account builds and all this and that, bro, you're taking a risk by just doing that. You don't want to do that to yourself because, one, let me tell you why you don't want to do that to yourself. If it's your last $50, then overall, if you lose your last $50 in the market, which you're already going to lose, you're a beginner trader. Your chances of winning and coming out of the markets successfully with, let's say if you start with $50 or $100, your chances of getting to $1,000 are very slim. I'm not saying it's impossible. I've done it before. Tons of people done it before. But your chances, I've done it before. Let me phrase it like that. I've done it before, but it has taken a while for that one successful account to actually go to 1,000. And most people will not tell you that. Most people will not tell you how many tries it takes to get to a certain level, right? So with that being said, there's a gnat right here. You have to understand that you have to stop being scared. And 2, you need to start trading things that actually has some movement, some volume. fuck what I know. I used to say this too, but then somebody told me some real things. Like if you really think about it, the people that really make a lot of money in trading, and I'm not talking about the gurus. I'm talking about people that actually trade. They don't trade no fucking AUD, NZD, no fucking CHF, JPY. They're not trading that, bro. They're trading gold. They're trading oil. I'm pretty sure oil is something. I'm naming commodities right now. They're trading NASDAQ. They're trading US 30. Some are trading SPY. These things move. They have movement. They're moving. They're super volatile. You can make money every other week, every day, if most. But I wouldn't recommend trading every day. You know, give yourself some break. You need to have this brain cleared out when you're trading, right? So basically, I'm going to finish explaining the trade. I'm sorry I got off track, but you guys got to really understand. Hi, how do you catch all these moves? How many setups you take a week? How many? Bro, first of all, I only take maybe like 6 or 7 trades, maybe a month. 6 or 7 trades a month. You want to know why? Because trades like this, they go on for 2-3 days. You can carry them on throughout. I've already closed this trade, but like this is probably a trade that I could have held for a couple more days, but price got to support. I felt comfortable, so I was targeting this level here. Once again, I was targeting this level because that is where, if we scale out, come on, that is where our swing low is. That is where buyers came into the market at this level. So price sold all the way down to this level. Buyers got into the markets. They started pushing price up. Price started showing signs of being bullish. Of course, there's going to be some liquidation here before price goes back up on another run. But that is why I got into this trade. So it could probably do the same thing. Buyers start kicking into the market, start trying to push price up, gold starts to rally, whatever the case might be. You just follow the reactions. You do not tell the market what you want it to do. You follow whatever it tells you to do. So the market is showing you, hey, buyers are here, sellers are here. Follow along with what they're saying and just go with it, bro. Stop trying to be this fucking genie, bro. Stop trying to be a genie. You're losing money because you're trying to be a genie. That's why you're losing money. You're losing money because you want to be the fucking see all, know all, bro. You don't have a fucking crystal ball. And I'm sorry for cussing so much in this video, but bro, like, you don't have a crystal ball. Just follow what price is doing. Stop holding yourself on one setup. Stop holding yourself on one trade. Get off of the smaller time frames, bro. I don't know what stresses me out more. Y'all sending me 5-minute charts or y'all sending me freaking NZD fucking ERG or some shit. I don't know. I don't know what makes it worse. You trading on the lower time frames or you trading something that just has no type of volume to it. And when I say, and I know some people are going to be like, but GJ has volume, but GU has volume. Bro, I kid you not, bro. Save your money up. Study. Play on demo. Study. Play on demo. See how everything goes on demo. Once you feel comfortable and you've saved some bread to the side, 500, 1,000. You know how much, I always bring up this story. I was trading one day, saved up for 2 weeks, 3 weeks, $900. And I didn't have skills at this time. I barely had any skills. I was making $10, $20, losing. But there's one day I was like, if I have more capital, I'm gonna make more money. No skills though. I had capital, or I was building capital, but with no skills, right? This crazy story, or you already know the story, right? Fucking finish what I'm finna say in the comments if you know the story already. Traded $900, put it into an account. Took me 3 weeks, 2-3 weeks to save up that money. In 5 minutes, I lost all that money that I saved up on my 9 to 5 job that I worked for 3 weeks to build up that $900 just to lose it all because I was thinking I was a genie. I was thinking like I just knew it all. I came into the market with no skills and it humbled me. So when I tell you I got a second job, I built up my capital again, and once I felt comfortable after studying long nights of how to read price, once I stayed up all these nights, I then put $3,000 into an account and then I started to build slowly my account slowly. And then as I started to stack a little bit of bread on top of it, once I went from 3,000 to 10,000, 10,000 to 20,000, then I started taking, risking a trade here, like taking a risky setup here or taking this setup. You could take whatever because now you have room. You want to just, all you want to do as a beginner right now is get out of the tight space. You're in the tight space right now. Anything under $5,000, to be honest, anything under $10,000, you're in the tight space. 5,000 is good. 10,000's you're there, right? And then you can scale from there, right? But if you're anything under $500, $1,000, you're really in that tight space. You just need to move yourself from $1,000 to 5,000, and then move yourself from 5,000 to 10,000 without risking so much. You need to build a system where you're coming in with consistent gains, not, oh, I have 500 and then the next day I have 3,000. That's a good, don't get me wrong, that's a good trade. That's a good setup, but you want to build something consistent where it happens all the time, right? Or it happens every other setup that you're taking, $500 a day or, $1,000 every other day. Like once you build up, that's what you want. That's what your consistency is going to look like. Most of my trades, I know I'm going to get to like maybe 100K, maybe 50K. It's somewhere roughly around those ranges. Sometimes I have a bigger day. You never know. I might put on a bit more risk. Sometimes I have bigger days, but most of my trades, they're around 100K, 50K to 100K, right? And I know that's my range, right? So with that being said, stop trying to be a genie, build some capital to the side. Once you build the capital to the side, you need to overall think about, okay, I'm going to take this capital and I'm going to slowly build it, because what people do not tell you and what people like, fuck that 1%, 2% shit, 3% shit. You need to overall think in your head, how can I replace my job? How much do I make in my job? How much do I make a day in my job? I make $50 a day in my job. I make $100 a day in my job. I work 5 days a week. Okay, bet. Okay. That means that I need to be making around maybe $60, $70 a day off my trades. Or you can have 2-3 days where you have, $100 days, $200 days, build on that. But you already, and when I'm saying this, I'm not saying it from a fucking 500, I'm not saying it from a $50 account, $100 account, $200 account. I'm not saying it like that. You need to work that job that you're working, if you don't have one, to the youth out there, my peoples, my brothers. I know you don't want to work a 9 to 5. I know you don't. I don't. Well, my life is kind of a 9 to 5. But anyways, I don't want to work it. You don't want to work it. Nobody wants to work it. Somebody has to work it. But hey, man, suck it up. Go to work. Once you go to work, stack your bread, bruh. I know sometimes people have kids, people have bills. I understand that. Student loans, not financial advice. I would do it another time once you start to get the money. But then don't try to get yourself out of your student loans while you're trading. Trade to build capital, trade to get out of your job and then become full-time and then work on that later. But once again, this is not financial advice. I personally don't have student loans, never had student loans, never had a car loan. And once again, this is not a flex. I just never kind of put myself in those positions. But like I said, not again, not a flex. People are going to hate me. People are going to love me. I'm not trying to flex, but I'm saying you have to be careful with the decisions you make in life. You have to be careful with the decisions you make in trading. I know shit gets hard. It got hard for me. I was homeless at 16. It gets hard. Shit gets hard. I understand. But everything you do in life, everything you even do on your trading account will show up in the future to bite you if it is a wrong thing. So with that being said, I hope you guys understand why I took this trade, and the reason why I took the TP down to this level is because this is where the next level of buyers are at, right? And the reason why I didn't go for this one or this one, because I know people are going to ask, is because from this level, the last low that price made from selling from this level was this one. And then this was the lowest low. So that means price is looking to take out the last area of buyers. It's going to take out these levels, but it is looking for the final boss. The final boss is here. So with that being said, like I said, after episode 10, I'm not going to be going over charts like that. You really have to shift your mind. I've told you how to trade. I've already, like, if you're watching this far, you already know how to trade. You're just overthinking it. You're just overthinking it, bro. Like, you're just way overthinking it.
In 2024, we didn't just launch another prop firm, we redefined what one should be. Transparent, reliable, trader first. You asked for more. We listened. The Prop Trade Volume 2.
Hi guys, welcome back to another video on me. Teaching you how to trade. Today is day 9, and today we're going to talk about identifying trend reversals. I'm basically going to show you how I was able to make over $200,000 today in one day alone by this setup, or just overall the strategy and the mindset that I have to overall catch this move. So let's get into the video. I'm not going to take too much time. So today, let me go ahead and reset this because it likes to bug out on me. All right, so today was a pretty clean day. Overall, I'm gonna play the before, and then you're going to be able to see the after, so you know that this is not, oh, I'm bar replaying and this is the strategy. So I'm gonna play the clip. I took this before I took the trade, or as I took the trade. Okay, so today we're going to be buying gold above these levels. So above this 1 hour level, we can see that price had bullish momentum. So from this level all the way up to here, there was a correction in the market, and now price is pushing back up. So if we scale down to the 15-minute time frame, we can see that price made a high coming into New York session. We ended up making a higher low, which is also a bullish sentiment. So we can see price push off this higher low and then target to up to these levels. Currently, Everything is looking good. Once again, turn on the session. As you can see, price is in New York session. So we're going to have that volume coming from New York session to tap up into these target levels. And that is because everything above this level is bullish. So if you see price was sitting at this level and then there was a bullish movement, price ended up making a new high off that movement. We had a correction and now price is pushing back up. All right, so with that being said, this was the trade setup that I took. This is how it went. Once again, targeting up into this level. But the reason why, because a lot of people was asking me, like, oh, I thought price was going to continue to sell, right? Now, this is what I want people to remember. In order to identify a trend, you have to overall go back, watch video number 1. So go watch talking about trends. So as I was talking about trends, I told you the moment price breaks a lower high, that's when you need to be in your head. You need to tell yourself, okay, this is something's up. Price is changing, something's different, because price should be maintaining the whole time. If price is going on a downtrend, it should be maintaining the lower highs. So every high should be getting lower and lower. If that is not the case, then the trend is changing, right? So in this case, right, let me find a different one, right? Price is up on uptrend. I didn't do this one. The reason why I'm avoiding this one is because it's a little stagnant, but you can see price got low, 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 retested, low, almost a retest, low, 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 and then price ended up going up on that uptrend for the correction and then starting back over low, low, or just this low, low, and then price ended up going bullish one more time, and then from here, low, low, and then so forth, right? And then this low, right? So from this low, it dropped all the way down to here, pulled back, made another level of resistance, and tried to sell again, right? But I want you to understand price is always going to maintain a structure. I think you really, really have to understand that price is going to stay in the fundamental structure at all times. It might look different with the candles. They might look different, but everything is still the same when it comes to those swings. So we have our swing low, a higher low, higher low, higher low is respected, higher low, and then continue and so forth. We can go on and on, right? But the moment, so here, right, higher low, the moment price makes this higher low, and there's one right here as well, that higher low, because we can see that push, or we can just use this one. It doesn't matter which one, but I can see that price came down from this level, shot down from this level, and then moved back up in a I guess you could say a very momentum manner. So we could use this one. But the moment price breaks that structure, you need to instantly start thinking price is on the same trend that you're looking for. You need to then take a look at what's going on afterwards. So basically, to explain today, because I know that's what everybody cares about, right? Basically today, price was going on a downtrend. We was on a downtrend last week for gold. Great, that is good. We're coming into Monday. Price has a lower high. So price goes up. It finds a level of sellers. Once it reaches those levels of sellers, sellers end up pushing the markets down, trying to break even more, and price fails to do so, right? And the reason why I say price fails to do so, because if we is to look at this, so if we was to look at any other time frame, right? So let's say the 15, right? Price pushed down to this level, and yes, we did make a new low. We did go and break and make a new low in the markets. On the 1 hour, it's the same thing too as well. This is that low, and then we see price goes lower. But today, coming into the markets, you can say, yeah, we have a new low, but that means price should respect this is our lower high, right? Even the fact, so even right here, right? Even though these are giving us new lows, price respects the fact that it has that lower high, right? even with anything over here, right? So if we go over here, if price is bullish, just because it sells doesn't mean it's not going to respect the support levels that it has. Also, along with the highs, it's going to know like, okay, this is the high, and if I'm going to be bullish, I have to break that high. Same in this standpoint, it can't break those support. It's going to respect that as a level of support. If it breaks that, then you get this. Then you get a whole new trend, right? So you got to remember when price starts breaking structures, you need to overall look at it as like, okay, what should I be thinking now? And the things that you should be thinking is, okay, price is broken that lower high. I can no longer continue to think that this is only a downtrend. So now you have to be open-minded to what the trend could possibly be. So coming into last night, price ends up buying the whole London session, coming in from Asian to London. London session, it buys up and creates a new high. So we know above this level of 3,278, we know price is going to push from 3,278 all the way to 3,296. Then we get a correction. We still haven't traded the markets yet. You still don't have to trade the markets, right? Because we can trade gold in New York session. So New York session for me starts at 9:30. That is when the bell opens, right? So with that being said, price pushes all the way back down and retests this level. Now in this case, price is grabbing as much liquidity as possible. Now I already can see the comments. Oh, it's just break and retest. In this case, it is a break and retest. In this case, you could call it a break and retest. I don't see it as a break and retest. I just find it as a correction. And then what I would do from here is scale down to that 15-minute time frame, and then turn on your sessions. So if you're looking for sessions, it's going to be sessions, Junior FX Addict. It's got 2.2 thousand people using it. And yeah, that is it. So for the people that keep asking me what my sessions is, there you go. All right. So with that being said, this session is New York. So the red one is New York. Let me make sure I got that color right. That red one is New York, right? So as we start to see in New York session, and this is 8 o'clock, 9:30 is roughly around here. Roughly around here. 9:30 makes that push above. We see rejections towards the downside, showing us that price is not trying to go anywhere lower. What you can do, if you don't see anything on here, scale down to the 5-minute, right? Scale down to the 5-minute. So your first confluence can be, okay, price is above this level. Normally, I just enter when price goes back above this level, and we have here, it stayed here, and then price pushed up once the New York session started. 9:30 was roughly around here. So right around here, price was kind of stagnant, came down, retested in these levels, and then had another push up for 9:30 coming into 10 o'clock. So these are things, and also here, like if you didn't get in around that 9:30, 10 o'clock, price came back down, retested these levels, and still respected the fact that this was a level of support. It respected the fact that buyers were sitting here pushing up price. So you can see that once people got down to this level, you can see that the buyers kicked into the market, pushing the price up. So this lets me know that there's buyers sitting here, and they're not letting price push down. So if price is rejecting this constantly, this is letting me know, okay, this is my support level, and price is not going anywhere below this level. And if you put that along with the fact that we've already had bullish sentiments above this level, so if we go here, and we already tie this in with the fact that we've already been bullish above this level, then everything works out in your favor once you press that buy button. A lot of people caught the trade. If you're not in the Telegram, I would definitely join the Telegram so you can definitely, stay in the loop of what's going on. But I seen that a lot of people got in this trade, and I'm proud of you guys. I hope I continue to make the teachings very, very simple. So once again, all you're doing is looking for your indication. Your indication is normally going to be the first breakout. You're going to be on the 1 hour time frame. So we're going to be on 1 hour time frame. Let me go back to my original chart. Boom. We're going to be on that 1 hour time frame. We're going to see that indication. The correction is going to happen, and then we use the volume coming in from New York session to push the markets in the direction that we wanted. So notice how price only pushed in one direction the whole time in the market. So that's something you want to be in, or that's something you will start to notice. Like, you cannot be getting in and out of trades all throughout the day. Like, normally when price is ready to push, it pushes in that one direction for mostly the whole session. So notice how this was all like after right around 12, like soon as 12 hit, price started to take off, and it was smooth selling. But by that time, you was already up a couple of pips in profit anyways. And by this point, you feel super comfortable in your trade, and everything else is just risk-free at that point. So then once you get to the target, remember, when you get to your targets, set soft TPs. So basically what this means is what gurus like to say is TP1, TP2. Like those are your soft TPs. You don't want to put your limits or your orders at this level completely, because then you can have price tap that level, show a little bit of resistance, because remember, sellers are sitting here, right? So whenever you're in buys, you're always targeting the swing high made on the 1 hour time frame. So this 1 hour time frame made this swing high right here. So let me zoom so you can see it. It made this swing high right here. Price pushed back, higher low, and then we use that momentum. Now we have a new swing high, right? So whenever you're buying, you're always targeting the swing highs first, and then you're looking for price to continue just a little bit more because you're using that 1 hour time frame. So normally when you're using that time frame, price is making that higher low, and then you need that higher high. So just like I said, when price is trending, it's going to look for that higher high, create a support, look for a new one. And that's how price trends. You always want to catch the trends, and these are the ways that I'm teaching you to, be able to see this so you can catch the trends. Because there's people now in the Telegram that are holding, gold buys, and they're up in profits. And you know what? Gold can keep buying, and they're going to be in this trade for a long time, and they'll be able to profit off of one trade, and they don't have to trade for the rest of the month. That's all I'm trying to teach you guys. I'm not trying to sell you anything. I'm just trying to teach you guys the proper way, or how I see the proper way to trade, very simple, without all this extra nonsense that you have to learn. People think that you have to learn all this crazy nonsense that's on the internet. You don't have to. This is the simple way. If you actually, take it in, understand it, or even give it some thought. Like, some people kind of look at this and be like, oh, it's too easy, so I don't want to trade this. Because they want to go learn all the complicated stuff. Like, I make more money than the people that use all the complicated stuff. But it is what it is. That was today's setup. Now we have a new high. Price is going to most likely give us a correction back under this level, and then we're going to continue to trend later on. Let's see, because this could change, especially with the fact that it is bearish. So if we go and scale out, we can see that the overall trend is bearish. We was able to capitalize off of buys today, but there is a new indication to show us that under this level, price is going to be bearish. So we're going to wait for that time to come. But for the meantime, price is acting bullish on the 1 hour time frame. This is the time frame that I use the most anyways. So this is the time frame that I like to follow. And I already profited on the trade that I made today. So yeah, with that being said, I hope you learned something from this lesson. Normally I like to break everything down from the actual charts. So I don't like to do the whole bar replay. I like to get into a setup and then show you the before and after of the setup so you can see exactly what I'm talking about.
When you're home late from work, you want shop with Dr. Q. Grab some shop gifts. Order anything you want and vibe away. Ding dong Glovo, ding
Order
ding
with
dong
Glovo
Glovo.
and track it to receive it in minutes.
Yo, what's good, chat? Today is trading day 10. Today I'm going to break down overall how to mark up your charts and how to see the swing highs and swing lows pretty easy. How I do it. But with that being said, I want to let you guys know that I love you guys completely. Thank you for the support. Thank you for pushing ICC. Just overall, spreading the knowledge and spreading the positivity around the trading community, and weeding out the core sellers, weeding out the gurus, weeding out all the fake traders. Thank you so much for just being here on the movement. Once again, I'll be doing a tour in Europe. So if you live in any type of European country, comment where you live. I'll be going to some of the big cities and just overall providing free events, so free in-person events for you to ask me questions, or to be honest, just utilize my time whenever I'm there. And of course, it's going to be free. I don't need your money. Just overall, I want to build my audience, and I want to build them strong. I want us to have the strongest community out of anybody. And just I don't know, man. I'm just keeping my head down and we're just gonna keep building. But all in all, I just want to let you guys know. Oh, my light turned off, but I just want to let you guys know thank you once again for all the support, for all the love. Every time you guys comment, DM, whatever, I see some of them. I don't see many, but I get to as many as I can. And like, I just appreciate the support because I just want to see people truly win. I just want to see people, just get to where they want to be from trading because trading has changed my life. So overall, I want trading to change anybody that wants to get into it and take it seriously. So once again, much love. But let's get into the video. Make sure you guys like and subscribe because it does help the video to get pushed out more. But like, subscribe, share it, whatever, and clip it if you want to. Put it on, yeah. Chat, don't hate me. Please don't hate me. But I recorded this video 4 times, bro. 4 times. And the OBS is just not working, bro. So it looks like I'm gonna have to pick something else because my OBS is like not letting me spit the sauce. So with that being said, the video, I'm just gonna upload it. You can still understand it. It's just a little bit laggy, a little bit glitchy, but you can understand it. But I'm gonna still post it anyways. Thank you. I'm gonna fix it next time for you guys. I, don't take too long on this one because it's pretty easy. All in all, let's just clear your charts. I feel like everybody needs a fresh start to kind of clear and clean their charts. You don't need many levels to trade. You don't need a lot of levels. You don't. You trust me, you don't. So I'll be seeing people mark every single thing on the daily, the 4 hour, the 1 hour, all these different things. It's just a mess. Your chart looks a mess. All you need is the previous swing highs and swing lows. So the biggest thing that I'm gonna get into is you only need 1 to 3 days, or let's say sessions, because you might take it literally and start marking up 3 days, 3 sessions, right? Only need 3 sessions, 1 to 3 sessions. What does that mean? So you got a clear chart right now. All you need to do right now, indicators, turn on sessions. And then gold trades in London and New York. So turn this off. And then look here, we have, let's just use this. We have 1 day, we have 2 days, 3 days, or sessions. So 3 sessions. This is all we need. To be honest, sometimes you don't even need that many. But if you really want to find where your swing highs and swing lows are at, you're most likely going to find it in the next 3 sessions. So with that being said, what we do from here, I've already previously marked this up. This is what my chart looked like a few minutes ago at 2:06. And this is what my chart looked like a few minutes ago. We previously marked this up. This is what my chart looked like. A few minutes ago at 2:06. It is currently 6:27. So 4 hours ago, this is what my chart looked like. And then New York session came in and then we got that push and everything. But that is what my chart had looked like. And the reason why I marked this level is because this is a level that I seen that price came into after having that bullish push. Once it got to this level specifically, it took a turn. So things like that, I'm like, if price came all the way here, it was really bullish. It could have kept going, but when it got here, it stopped. So that must mean sellers are here. Boom. Common sense, right? See, common sense. So if price gets here, That means sellers are here. So now when price makes a new high, because obviously this is a new high, look at all the stuff that it broke previously. And we're not going all the way back just to, find a new high. We can obviously see that price was slowly breaking down onto a downtrend, and then it zapped out of nowhere, right? Anyways, with this being said, once price makes a new high or a new low, in this case, a new high, you need that level of support, because this level of support is what you're going to play off of, right? So now that we see it now, normally I don't mark all this, but for you guys, I will mark it. But this is the level that I chose. The reason I chose this level is because we can see price is going down. And the reason why I didn't mark this one is because price came back up. So I just count this whole thing as a swing high. You can see price came here, reacted, tried to come back up, reacted again. So I just count this whole thing as that swing high. But anyways, the reason why I marked this one, and once again, I mark up my price action on the 1 hour time frame, but because you guys will literally only use the 1 hour time frame, but you can do the same thing on all time frames. So once again, let me repeat myself, because for some reason y'all be like asking me questions where y'all be like, well, what do you do about the 15, or what do you do about the 5? Or it's literally everything you're looking for on the higher time frame, you're looking for on the lower time frame. Nothing changes. Just because the time frame changed doesn't mean the price action change or structure change. Market structure doesn't just change the rules of it, or it doesn't change the fundamentals of it just because you went down a different time frame. So once again, the market structure is still the same. Higher highs, higher lows, higher highs, higher lows, lower lows, lower highs, lower lows, lower highs. Nothing changes. So anyways, the reason why I chose this one is because we can see price came into this level, and we can see that price reacted. It reacted a couple times for me to make that decision, but it's okay because we have a new high. And overall, I'm just looking for price to see if it's going to continue to, make new highs, or is it going to break down, whatever the case might be. In this case, we'll be in a no trade zone. A no trade zone is when you have a high and a low, but no indication. Write that down because you might need that. So, indication. A no trade zone is when you have a high and a low, but no indication. Write that down because you might need that. So let me go here, turn this down a little bit. Okay, oops. Okay, no trade zone is when price has a high and low with no indication. Right? So you have a swing high, swing low. If you need help with your swing highs and swing lows, pivot points high and low. This will overall help you and guide you into a decent direction. Do not solely depend on the swing highs and swing lows. Turn it on, see if you got your swing highs and swing lows right. Some of the swing highs and swing lows that price chooses, you're just gonna have to play around with them, because overall, like, I don't use these, but some of the swing highs that it marks out, they can be pretty valid, but I just overall look at I don't know. I'm really strange when I see some of the highs that are marked. Like I wouldn't mark that. I don't think I would mark this. Yes, I would. Okay, it's pretty accurate. There's some times where this thing don't be accurate, but it looks like it's pretty accurate right now. Maybe they updated it or something. I don't know. But sometimes this thing be kind of off. It'd be marking some of everything on. But anyways, turn that on, and just based off of what you see, mark up your swing highs and swing lows, or even test yourself. Mark up your swing highs and lows, and then turn it on and see if you're right. Right. So, anyways, on some of the highs that are marked, some of the swing highs and on. If you need help with your swing highs and swing lows, pivot points high and low.
Don't vote today. See you next time, chat.